Ethereum made its move. The altcoin leader finally woke up, going through a strong push up and pushing out of this triangle. And we're still waiting for this chart to retest this trend line and confirm a breakout and further positive price action. But Ethereum pushing like this reminds everyone it's still the benchmark for everything outside of Bitcoin. And when ETH makes a major move, two things usually happen. First, it builds confidence in the altcoin market, supporting the idea of an altcoin rotation. And second, it sparks that hope across every other project community. People start to believe that their favorite altcoin is next. We've already seen a few names take that momentum and run with it. XRP pushed to a new record high, and it's holding up in the highest trading range we've ever seen this at. Imagine, the peak price range in 2018 lasted a few hours before the price crashed down, and now XRP is consolidating at this range. This shows progress for both the altcoin and the project behind it. And this is the same story for a lot of other altcoins on the market. That's what you expect in a market that goes through rotations and cycles. Now, if we focus just on the larger altcoins, specifically the top 100 or even the top 50, a lot of these heavyweights haven't really moved. They're sitting in the same ranges they've been in for weeks, even months, watching the action from the sidelines. And this raises a big question. Are they storing up energy for their turn after Ethereum pushes further, or are they showing us that they've lost their ability to lead? Because in a bull market, you don't just need staying power. You need to prove that you can still break records. If not, there's always a hungrier, faster growing project ready to take your spot. And this isn't just a theory, it's how every cycle plays out. In the last bull cycle, plenty of top altcoins that everyone assumed would be untouchable ended up getting outpaced, replaced, or completely forgotten when the next wave of narratives hit. Momentum moves fast, and the market doesn't wait for anyone to catch up, not even the most established projects. Which brings us to Hedera. Here's a project with all the right headlines. An enterprise council stacked with global brands, credible tech, partnerships, and real industries. By fundamentals alone, you'd think it would be an easy top-performing candidate during an altcoin rotation. But the chart tells a different story. On the daily chart, HBAR has been in a choppy range since the early August peak around 30 cents. Every attempt to push higher has been met with quick selling, pulling it back into the 20-cent range. But this level has become an important short-term pivot. Holding this position means keeping the uptrend from July alive, but losing it could open the door for a retest of the 22-cent support from the late July. The full timeline for Hedera reveals more about this chart. Since its launch, Hedera has had two major impulse runs, one during the 2021 cycle and another in late 2024. Both times, big spikes in price were followed by steep drawdowns, and so far it hasn't been able to sustain long-term breakouts above its previous cycle highs. Right now, we're sitting well below the 2021 peak and even under the highs from earlier this year. While this recent rally was impressive in percentage terms, from a macro view, Hedera is still fighting to reach a higher trading level. And as other assets show they can respond to bullish conditions, HBAR's price action almost feels separated from the hype. So now the question becomes, what is holding it back? Is this the kind of sideways trading that's building real hidden strength before a move? Or is it a sign that the market just isn't ready to reward this ecosystem? Well, I can tell you one thing for sure. As much as Hedera has made a name in the crypto space, it's also met a lot of criticism from the community because of how the project is designed. And the reality is, crypto projects get heavily impacted by community sentiment. If the general consensus is that a project ecosystem doesn't have a bright future, FUD starts to spread. And if there are no real updates, this hurts their reputation more. So where does Hedera stand in all of this? Is this still a top project? Or are they just hanging around and hoping to catch a piece of the altcoin rotation? We'll go through all of this today. Now, when you're looking at price charts and seeing a consolidation take place the way HBAR looks right now, you could find some trading opportunities, especially if you're considering futures trading. And in these moments, execution matters. Delays set you back, and unorganized platforms make it hard to move fast. One of my go-tos in these situations is WEEX. It's fast, easy to use, and you can easily track your positions with their clean user interface. Having a reliable platform really matters, especially when action starts to pick up in the market. If you're interested in trying out WEEX for free, then follow the link below. You'll also receive 30% off your trading fees with my link down below. And if you're looking for high-level insights on the market, along with discussions on trading opportunities, then check out our Discord. There's a full community on there working together to understand market trends, and I've personally learned a lot from my community. Link is down below if you want to check it out. As always, none of what I share is financial advice. Please make sure to do your own research before making any financial decisions. Now hit those like and subscribe buttons, turn on post notifications, and let's get started. So we need to be honest about what's holding the Hedera ecosystem back. And the reality is, this is one of those ecosystems where the positives and negatives live side by side, which could explain the struggle we're seeing on the HBAR price chart. One of the main things I hear from critics is about the governance model, and this concern is valid. Hedera's governing council is stacked with names like Google, IBM, and other big enterprises. And this council is currently operating all network nodes that secure the Hedera network. So while you could call this level of enterprise involvement bullish, it's a step away from decentralization. It feels like a permission network run by corporations. And whether or not that's good for the project ecosystem, perception matters here. It can make Hedera feel less like an innovative movement and more like a closed club. Now, initially, there were plans to roll out community nodes to the wider community, and that would help push the project back towards decentralization. But as of now, the team has pushed this further down the roadmap to prioritize other developments and updates. Then there's the question of utility actually showing up on chain. Hedera's got the partnerships, the enterprise pilots, the big announcements, but you don't always see that translating into growth in things like active wallets or visible user activity. For example, the DeFi TVL of this project is sitting at just over $100 million, and this has been rising over the last few years. But compared to other charts dominating the DeFi space, Hedera's network is still playing catch up. This is a reflection of their level of adoption so far. And because of this, it's easy for the market to brush off those bullish headlines as just temporary hype. And this leads to the topic of retail adoption. In past cycles, we've seen projects explode because they caught cultural momentum, whether it's through NFTs, gaming, meme coins, or just strong community energy. Hedera hasn't really had that moment yet. And without it, you don't get that viral wave of interest that pushes a chart into price discovery mode. And of course, sentiment plays a huge role. So while the fundamentals might be there on paper, the market's confidence in Hedera hasn't caught up yet. And in this space, confidence is often the difference between a breakout and another trip back to the bottom of the range. But that's only one side of the story. Because while Hedera does face those challenges, it's also been quietly building in ways that could set it up for a much stronger position moving further into this bull cycle. So let's start with the council itself. Yes, the concentration of power is a concern for many, but the flip side is that Hedera's governance roster is unlike almost anything else in crypto. These are names that also trust in Hedera's technology, and a lot of members are actually making use of the network for their own operations. For example, just a few months ago, Arrow Electronics, one of the largest electronic distributors in the world, joined the Hedera Council. And they're actively exploring a way to integrate Hedera's network in a supply chain use case. That's more reach into high value, real world industries where distributed ledgers can make a difference. Now, these partnerships aren't just sitting on hypothetical use cases. Lloyds Bank, Aberdeen, and Archax teamed up in July to execute the UK's first institutional foreign exchange trade using tokenized collateral on Hedera. This wasn't a testnet experiment. This was regulated real-world finance operating on chain. In the same month, the Reserve Bank of Australia selected Hedera's network to be part of Project Akasha. This is an initiative to support the settlement of tokenized transactions using stablecoins, tokenized deposits, or a pilot wholesale central bank digital currency. So moves are actively being made to merge traditional finance to Web3 tech. Then there's Hedera's push into verifiable AI. They're collaborating with Equity Lab to deliver policy-aligned AI compute service, with Hedera providing the trust layer. This is paired with the release of Hedera's own AI Studio toolkit this year, an open-source modular kit for building trusted, auditable AI apps, and also the launch of Agent Kit v3, which provides developers a suite of tools for deploying verifiable AI agents on the network. Yes, AI agents are still relevant even though this sector was flooded with fake junk bots and fluff. There's a reason why we're starting to see AI agents pop up everywhere, including OpenAI's agent release. and more instances of autonomous agents being integrated into real-world businesses. On the consumer side, the Hedera to Earn platform went live a month ago with Cashtree Global, Mars Labs, and Barry Fox integrating over 24 million users through the new HTE reward token. This kind of cross-app rewards program has potential to finally bridge that gap between enterprise use cases and retail engagement. So where does that leave Hedera? It's a project caught between criticism and real-world usability. The foundation is there, but now it's about execution and adoption. A push into retail and a long-awaited update on community nodes could shift sentiment in a big way. We did see Hedera get its name out there with their karate combat and UFC affiliations, but we definitely need to see more. Hedera definitely has potential to flip from a slow mover to one of the stronger lagging players in this market, but only if it can bridge the gap between enterprise headlines and visible on-chain activity. If that happens, this chart could look very different. Either way, it's one I'll be watching closely, because in crypto, big updates and perception can flip overnight. What do you guys think? Is HBAR going to climb the chart soon, or are we going to watch this fall out of the top 100? Let me know your thoughts down below. As always, none of what I share is financial advice. Please make sure to do your own research before making any investment decision. It pays to fully understand the projects you're getting into. Don't forget to hit those like and subscribe buttons and turn on post notifications. Hope you guys enjoyed the video, and I'll see you in the next one.